This is Don DeBartolo, a senior commodity broker with Daniels Trading in Chicago. I'm also the publisher of the Trade Spotlight Futures Advisory Service. Trade Spotlight is broken into three segments: Trade Spotlight Futures, Trade Spotlight Commodity Options, and Trade Spotlight Future Spreads. This is the Beyond the Spotlight, a video that spotlights 2 or 3 markets that may become trading opportunities for the week ahead. The week in question begins with Monday, January 28th, 2019. Before we get started, please take a moment to pause the video and read through these risk disclosures so you understand the risks involved with futures and commodity options trading. This is what the Trade Spotlight email looks like. That goes directly into your inbox. If you're a subscriber, you'll have the timestamp, a write-up on the market and the trade setup, the specific entry price, whether it's a futures contract, option contract, or spread, margin requirements if necessary, the stop loss and targets, so the risk-reward parameters for each trade, and a link to the chart. Okay, let's get right into it. The first chart I want to review is for the March 2019 natural gas, and I'm looking for a trade to the upside. And what I see on this chart is a 1, 2, 3 formation. This is the number 1 point, the number 2 point, and the third point is right here near that 290 price level. I'd be looking for a break above today's session high. This is the Friday session, January 25th. That high is 30.90. There's also a 200-day moving average at 31.04. So a little more conservative approach would be to buy in a break of that 200-day moving average. The upside target, there are a couple levels here. The 38.2% Fibonacci retracement. That's also a 50-day moving average up here at 35.17. And then you have the 50% Fibonacci retracement. That's a retracement of this sell-off after this big monster move that occurred in November. The Fibonacci retracement level at 50% is right around the 370 level. There's also a pivot point high right here from December 20th at 36.59. That would be my secondary target on this trade. Sell stop could go below this session low, although you would be taking on considerable risk. 28.97 is that low from the 23rd of January, just a couple days ago. You can go a little bit lower here down to this level, but again, that's considerable risk in natural gas, although at the moment not too concerned with downside as we get into the meat of the winter months. In Chicago right now it's 5 degrees. Next week we're supposed to get down to negative 18 degrees. That's going to put strain on the supply, especially as that moves towards the East Coast, if it's not already there. There was already, with analysts are looking for a withdrawal next week above the 5-year average. So there will be a potential draw on the natural gas storage, and that while that may not lead to a breakout in the market to the upside, it certainly should put in a floor, which I think to be this 290 or even this 280 price level. Moving on to the next chart, this is the March 2019 soybeans, and what I have drawn off here is a large pennant formation. And you can see today's trading action. This is Friday, January 25th when I'm recording this video, broke out above this upper trend line. That upper trend line came in about call it 9.19, and today's closing price was 9.25 1/4. So 6, 7, 8 cents above that trend line. Would like to see a pullback to that trend line to purchase the contract, whether it comes Monday or Tuesday next week. Short-term upside target is that 940 level. That's this point near the upper trend line. It was 941 even actually from December 12th. Otherwise, you can look at the 50% Fibonacci retracement near 950 and that's a 50% retracement of this big sell-off going back to the middle of summer. A potential stop loss can go below these recent lows. There's also a 20-day and 50-day moving average down there. The 20-day moving average is 908 and 7/8. The 50-day moving average 908 even. So stop below that level, or that low is 909 and a quarter from the 24th. So yesterday's trading session. That's where I would place my initial stop loss on this trade to the upside. Right now, the MACD trend indicator is relatively flat, but there is momentum to the upside. But would like to see the market hook back over, back towards this trend line, and then purchase on that retest. And the last chart I want to look at today here is the May 2019 feeder cattle contract. I have a couple of patterns drawn off on this chart. The first is a pennant formation, though there's one touch. If you come back here to that 12-month contract high from October 2nd, 2018 at 155.35, but then you just have a series of near touches until you get to today's session high, which was 145.90, and then down below you only have two touches once again. You've got the 12-month contract low, which was December 4th at 141.85, and then the session low from the 23rd, which is 143.20. So only two touches on either side. You'd like to see more to confirm that pennant formation. So otherwise I have a channel formation drawn off, going back to the beginning of November. So the last 3 trading months, that's a tighter formation. You can see this is just a sideways market. I have a series of moving averages here of different time frames, and they're all converging about this same level where we're trading now. So you have a sideways trading market, and a lot of that could be the time period we're in. Also, the recent government shutdown. There haven't been, crop reports, energy reports, things of that nature to help guide the markets. So that relates to the soybean and the natural gas markets I showed in the last 2 slides. There could be some volatility upcoming here now that the government is reopened for the next 3 weeks. So looking for some volatility in these markets. So want to be quick to trade these markets when this opportunity is available, because they may be short-term trades once these reports come out and we get conflicting information. So the trade setup here is to wait a break of this upper trend line, a break of the channel formation. So waiting patiently for that to happen. MACD is flat. That's the trend indicator. You've got a little bit of momentum to the upside, but again, you like to see a pullback and then a hook up to get long if indeed that's the way this market's going to head. So I put my contact information up on the screen if you have any questions about these 3 charts or just any markets in general. My direct line, cell phone, and toll-free number. You can also email me at any time at tradespotlight@danielstrading.com. If you're not following along with the Trade Spotlight, I encourage you to do so. You just go to the Daniels Trading website, click on the Advisories tab at the top of the screen, and then Trade Spotlight under Technical Analysis Services, and you can subscribe by clicking the orange button to all 3 segments. You can take a look at a breakdown of all 3 segments and an FAQ on each. It's free to clients of mine or Daniels Trading. You can also get a free 90-day trial if you're not a client of the firm. After 90 days, you're billed $99 quarterly, but you're not charged until that 90 days ends. Thank you for taking the time to listen to me today. Happy trading.